Hi, it's Larry Gaines, Power Cycle Trading, and it's Wednesday, February 27th. Before I get started on this market video, if you've ever wanted to learn about weekly options and learn how to use them for your day trading or swing trading, please make sure you join me on March 9th. That's a Saturday, and this is going to be a exclusive virtual trading boot camp from 10 Central in the morning till 4, and usually goes over. But I'll be going through a lot of information and trading strategies for weekly options. So please come join me, and if you would like to get the link here, I'm going to show it to you real quick. So the link is just go to powercycletrading.com/boot-camp-4-weekly-options. Click on it, you'll get all the information right there, and you'll be able to register. Also, this link will be on the on this email. So go check it out, and hope to see you there. Now today the market's got a pretty good pop back to the upside. Bernanke was speaking, reinforcing the easy money policies, and that really kept the market moving higher. So we almost recovered the full retracement of the market move from Monday, down from 1526 down to that low of around 1485. And today we moved back up. Our system was short from the 13th of February, and today, based on this closing price, is currently neutral. So the trend, is trying to shift back to the upside. It came down here, the other day, broke this 1495 level, and never made it down to this 1473. So did break below the 21-day moving average, and today closed back above that. And our system again is neutral and holding above these moving averages. Now when we're trading, we always use multiple time frames. We never rely on just one single time frame, and you can see here the 60-minute time frame. Our system came in on the 25th of February, was short right here, went neutral this morning at 11 o'clock Central, went long at 1500 hours, 3 o'clock Central, and closed up. Went through the 618 retracement and closed up right at that 786. So that's the Fibonacci from taking the high of on Monday to the low of yesterday, and then put your extension Fibonacci levels in here, and you can see that it plowed through. Yesterday it closed right at 382. Today it went through that 50%, and that's shows you commitment to the market. So that was some pretty good fall through strength to the market today. Now here's another view. Here's the longer term time frame for the S&P 500 cash. This is a weekly. You can see last week we had an outside day where we had a higher high, a lower low, and engulfed the prior week. Now this week it could be the opposite, so it's a pretty crazy market. If we get a close Friday above last week's high, then that's an outside day to the upside, and then that signals a high probability to push higher into the highs up around 1550, and I'll show you that. Now here's a good picture here. This is the monthly time frame. I call this the macro time frame, and you can see here that we're breaking back above this ascending channel here. This is your top of this trend line to the upside, but it shows you it's been pretty symmetrical, and today with this kind of close we're starting to break above that. And we saw that back in 2007 where it broke and extended. Now this shows that it's a really good probability if we have a weekly close higher than last week. I think there's a good shot that we could get back up here to this 1550 area, and this would be like a triple top. So this is a key area. If it gets back up here, we had about 1550 high was 1552 back in 2000, and then we had this high of last in 2007 of 1576. But you can see this 1550 level. That's a key area. So watch for the weekly close this week, and if we get a strong close, then I think high probability of that happening. Now, with this kind of market, you need to be careful. I mean, everybody's pretty bullish right now. Market's trending, but when you get up here it gets kind of dangerous, so just keep that in mind. Now here's the NASDAQ 100 NQ. We had our system which has been short since about the 20th of February, excuse me, and came down, had a big move down, came all the way down here to actually the 100-day moving average, bounced back up today. The system's currently neutral. So we're back into the 21 period moving average right here, closed right above it, came down, broke this support level of 27.05, and we're back into this next resistance point at about 27.75. Did not quite get into the gap area. We got down right on that gap right there, never could fill it. So we'll see what happens over the next 2 days. But strong closed today based on the indexes, and the Dow almost made a I'll show you the Dow next. Now here's the Dow Jones, here's the CBOE cash. You can see the prior high was back in 07 as well, 141.98. So we're into that area. So this is a key area up here. This is an area where if you're a technical trader, you do not want to be buying going into resistance. You want to make sure that you break resistance, consolidate, and then that's when you would buy. So when you're getting up here to these critical historic tops or whatever, or any top on a resistance or support, the first time up, it's not the time that you want to buy looking for the breakout. Most of the time they'll have some kind of pause or pullback. You want to buy after breakouts. The breakout is to the upside, and then a pullback, and you buy the pullback. Now a couple things driving the market today. Google had a really great trade setup, breakout to the upside. Here's your trend line. I love this setup when you have the 60-minute intermediate term time frame, and our signals using our model went long as well. But when you have a pivot, when you have a defined trend line based on these pivot highs, the way I teach you to extend a trend line, when it breaks and gets that follow through extension, that's when you want to get in. So also it broke that high right there, so you had a powerful break to the upside, broke the trend line, made a new high above that bar, and it was off to the races back up to almost back up to the top here. So this was a great trade breakout here today. That was on Google. Now you can see the opposite here on Apple. Now keep a close eye on Apple. I came real close today to putting on a swing trade on Apple. If it had had more fall through and broken this trend line here, this supply line, I was getting ready to put on a option strategy to take advantage of that. Now our trading model is very close actually to going long based on a cycle low trade set up to the upside based on the medium term time frame. And what I like to look for is when that cycle model that we use kicks in long on one of the indicators, then I like to look over to the intermediate term time frame for the same type of setup. We always use 2 time frames at least, and I'll look for our system, see if it's long, and I'll look for different squeeze type trade setups to breakout for breakout momentum type setups. One thing looking at trend lines and moving averages, and a couple of other things that we use for our trading model. So this is one to keep an eye on for potential swing trade to the upside. If it can get through this like 452 level, more so if it can get through 455, then I think there's a good high probability potential for this thing to get back up here into this 465 level. I was looking at the 460, 465 vertical call spread today. If it had done that, and I was looking out to the March 9th expiration, which would be March 8th or 9th, which would be a week from this Friday. Now here's some of the correlations that we've been tracking over the last month or so. You can see the bond movement down has really helped to propel and push the equity markets higher. Now we did have this correction back up the last basically starting last week, where we saw bonds cycling low, bottoming out, breaking the moving averages. Our systems were long, and we saw a nice break to the upside. We did see equities crack. We saw a few cracks based on that, and we did see the momentum start stalling in equities, and we'd had that big pullback over Monday, basically Monday on the equities. So bonds today came back down, equities went up. And we also keep talking about the different correlations with the currencies. We've had this huge move down on the yen, and that's been a really big beneficial factor to pushing the euro higher and the dollar down. So that created, a big surge in commodities and the equities as well. We've seen this bottom a little bit. We had some good fall through going the last couple of days, and then today we saw it back off again. So we'll see if this thing, the yen, needs to get back above this 21 period moving average to extend a little bit more of a short covering rally, and that will put pressure on the equities. Now if this starts to fail and goes back down, that's going to be beneficial to the equity market. Here's the other side of that. As the yen was going down, it was forcing the euro currency up. Then we saw that reversal. We saw the yen start to bottom. Euro came off hard, and that also, with the euro coming down hard, that really pushed the dollar higher, and that had a big effect on the markets, stalling the equity markets out, and especially commodities. Here's the U.S. dollar, and you can see it broke through this trend line, had a really big explosive move to the upside. And let's see what the fib levels tell us now. Really interesting. You see that the 618 retracement here just nailed the dollar move. It just stopped dead. The 618 is usually the biggest number from what I see, my observation using Fibonacci. If it gets to the 618, that's usually where it needs to head. That's a target. That's a real magnet for corrections. And usually the 618 is where it will stall out the first time. We'll see. It could come back down here to the 50% retracement, consolidate, and then break back to the upside. But right now, it's been halted right here at the 618, and these correlations have all kicked in and pushed equities higher. So good luck tomorrow trading. I'll talk to you after the close.